Hello everybody, good afternoon. Today we're just going to be doing a review of what the market did. I marked out this wick right here because it's the lowest wick of them all. This wick's important, but after this it's less important because there's a wick that takes out that liquidity. So that's your most recent wick. That means this wick's number 1, this wick's number 2, number 3, and this wick's more, I'd say this wick's more important than these two. But I was expecting a move up, maybe to here, but obviously that did not happen. So I'll just show you what I did yesterday. So in the morning session, pre-market session, we started trending downwards. We didn't take out highs. Highs left intact, highs left intact, highs left intact. We took out this high, we took out this high. And the reaction to that is just down move, down move. Failed to get to this high, and massive down move. And then we create this low here, the 930 low. Takes out that liquidity and moves up. I'll show you why it moved up in a second. And we started searching for liquidity. This is a very choppy session, and I'm honestly not a fan of it. But usually with choppy sessions, clean moves in the afternoon session. I'll show you how you could have captured that move. But I just wanted to note that this was the beginning, and it moved off of this wick. It was deciding if it wanted to stay below here. Look here, goes right below it, goes up, taps it, goes down, couldn't even reach it, taps it again, and look at the reaction from that. It tries to reach to it here, barely gets into this fair value gap. Institutional order flow entry drill right here. You could have taken that to liquidity. This is a good target. I'm not even sure if there's any better liquidity. Let me just search around. So we're in this price action right here. This is the wick. So you could have taken profit. This inefficiency or this breaker. Could not have even, it did reach that breaker, but it could not even have touched that and just immediately went up. So the immediate rebalance I have marked out is, was this going to leave a gap? And if it touches this, it's immediate rebalance, and the next day or so, day or two, you're going to see a massive move down. So we left a tiny, tiny gap. That's the size of the gap right there. From this high to this right here. That's the gap it left. So I'm not really worried about that, because on the 1 minute chart it's a tiny gap. I'm counting this as immediate rebalance. and made that high. Tried to find support at this wick, failed, went lower, tried to go past it one more time, failed, and then we just see a giant trend downwards. One retracement in here. This took place in London session. Took out these lows and decided I'm going to try it one more time. Took out lots of liquidity. Took out this liquidity. This is pre-London session liquidity. Failed to get to New Day Open liquidity, which would have been right here. Let's mark that out. So that's the liquidity I would have been searching for if I was in this long move. But because it kept failing to get to this gap, kept failing. But it's moving lower. So, I mean, eventually it's either going to spring up, tag this immediate rebalance, and then fall off, or it's going to go down, trend down to here, and fail to get to this liquidity, and trended down, trended down, trended down. And then it takes out pre-market session liquidity with a big candle, and immediately at 9:36 reverses. Okay. This is my first presented fair value gap. Why this one? Because it takes out this liquidity, takes out this liquidity, and immediately finds support there. You could have taken this trade to pre-market session highs. Well, it didn't. Oh, it did quick. But this is consolidation. This is a mess. If you're in this move, this is the time to close your computer, set your stop loss, and just let it ride. Don't even worry about if it actually is going to hit your TP or not. This is just a mess. But in the mess, after the mess, creates a big move, doesn't it? We have, this is the first. This is the liquidity I'm looking for. Because it's a big swing high, and it's created with a volume imbalance. That shows me that they wanted price to go down here. They wanted to leave this gap. They wanted to create a low so they could use it in the future. At first, it doesn't get past that. It tries, touches this volume imbalance, can't even get to the bottom. Immediate support because of that. Then institutional order flow entry drill comes up here. And I marked out this volume imbalance because the same thing. It's going to be used for something. First, it's used as a massive selling tool. It just brings price down, takes out this liquidity. If I were in a trade from here, I would be looking for these equal highs. But they already got taken out. So I'd look for this high right here. And it hits that, comes down, fails to get to the New York session liquidity. If it got below here, I would be thinking, all right, this might be a sell-off day. But it couldn't quite get to there. Creates a 5-minute breaker. over this liquidity pool, this liquidity pool, this liquidity pool, this liquidity pool. Makes relatively equal highs in the breaker. 5-minute breaker takes all that liquidity out within the breaker and immediately responds to that. So I'm thinking, okay, maybe it wants to go up. It comes up, leaves the breaker, touches it again, finds this massive candle, comes down, touches it again, massive candles, touches it again, massive candles. So what you're thinking right now is, well, that looks pretty good. And then touches it one more time, comes down, takes out those buyers in there with their stop loss below that low. And then huge up move. And where's it go? These relatively equal highs right here. Through all this price action, these are pretty good, but this will be my first target. Well, this will be my first target. Well, let's see if these are even relatively equal highs. They are. So that's my first target. That's my second target. 3 equal highs on that usually means something good. Oh, but that's why that wasn't my target, because it already took out that liquidity. But leaves some nice equal highs here. This is London session creating that liquidity. And then comes back in New York and takes out that liquidity. That's the afternoon session, but it's also the ending of New York. And then after that liquidity is cleared, we just go into this range, break out of the range, go into a different range, break out one more time, takes out these highs, and then comes down. This is also just a mess. So I don't trade Asia. I'm just not a fan of how the price moves. It's very stagnant, and the big moves often have retracements in them. So it's hard to pick a high like this one. It's hard to take liquidity at afternoon session or this volume imbalance when price is just gonna come up and take you out. Like, this is scary. You're probably thinking, oh, return to this breaker, it's gonna go down. Just completely fakes you out. Anyone who sold here, 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 they're all taken out by this candle. So that took out how many people? 1, 2, 3 groups of people, 4 groups of people. So that's why that turns valid after taking out so many people. It becomes a good spot to sell because fake out, fake out, fake out, fake out. Just been baiting sellers the whole time, and buyers have been getting destroyed too. You bought here, you're out. 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 Or you're not out yet, but you'd be taking profit probably at these equal highs or that high. Can't tell. Yeah, no. But that's still a high. That's still liquidity. Even though it's not a relatively equal high, it's still liquidity. And then after this one move, comes down, consolidates, breaks lower, comes up, breaks lower. Anyone who sold here, 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 they're all good. Because I'd assume they're taking profit. They might be taking profit at New York low. So this retracement would have got them. But look at how cleanly that goes to New York's low. Immediately turtle soups. Comes up, fails to hit this volume imbalance, takes out this liquidity. And leaves a breaker. And then right after that breaker, falls off, hits the 5-minute breaker, finds support there, and then goes through it. We failed to even reach the 930 first percentage fair value gap. But what we do hit is a fair value gap that overlaps that. So that would have been a good entry. And if you entered right here, you put your stop loss above here. Put your stop loss 1, 2, 3 candles. The first and the second candle make the fair value gap. And you put your stop loss above the second candle. It's high. So stop loss right here, entry right here. And we're down. Oops. I'd be looking to take profit at that high, that low, I mean, right here. And on the daily chart, we've taken out that low. So now my next target's all the way down here. We'll see how soon we can reach that. It's looking pretty fast, immediate rebalance. I mean, things are moving right now to the downside. This was just sell here, sell here, sell here. The smart money's all selling here, 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 here. They're preparing for this move. This is bait. You sold here, you put your stop loss above here. You got taken out. Liquidity grab. You think it's safe because it's in a suspension block. Suspension block gets taken out, and that creates the high. It's funny how this seems valid, and that's why it's not valid. Because you're thinking, well, found resistance here in the suspension block. It couldn't close above here. So that's got to be good. That's got to be valid. But in reality, that's how everybody's thinking. So you need to think a step ahead and say, well, if that seems valid, it's probably going to be a liquidity grab at the safest spot right here. This is the safest spot for your stop loss. What seems to be the safest spot for your stop loss is what I meant to say. But truly, it's not. And you would have got taken out. And the move would have ran without you. Like, this was leg 1. This was the start of leg 2. And now we're going to go down here. I'm going to assume that this phantom trend line that I marked out yesterday, this isn't valid because of these 2 wicks. If they were under this and just touched it, I think we would have came up and ran out this high right here, and then done this move. But because these 2 wicks go through it and don't really find resistance, this is a retail idea. So I'm basically just using a retail logic. I learned this stuff from ICT. He uses retail logic to strengthen his ideas, and he's used this before. And I've never seen him use it on the daily chart, Let's just find an example real quick. Can't be that hard. I'm not seeing any. I'm not worried about that right now. But basically, I see this being intact. I see this as a zone. Here, let me delete everything off the chart. I see this to this. I don't want to see price go into there. I'll let it travel through this wick. There's probably entries here. I'll let it go to the 50% if it closes above that. Well, it's probably not going to close above that, but it might. And now just look. Look at how that's used. Creates a high off of this level, which is why you shouldn't be selling here. And then find support here. Support. Can't even make it to that. Resistance. Resistance. Catch it one more time. And then boom. Huge sell off. Right to the end of that gap. So that would have been a move that I would have caught if I was awake this morning. I woke up kind of late. But I would have seen this as a line in the sand. I don't want to see it get above here. And I would have seen it. Because all this is in this mess right here. This bottom wick to this top wick. It's basically just measuring out the lowest wick to the highest wick in a range. It's kind of an idea I kind of found myself. It's like a gap, basically. And look at how this gap's used. That's the high of it being made. Look how it rejects right off that 50. Goes above it once. We'll see it in this mess. Closes up. Closes on it. Up. Closes below. Up. Closes on it. Up. Up. Finally goes through it. Touches it one last time. Touches it again. Touches it again. See how these candles are like this on this line? That's how you know it means something. When candles do this, when candles do this, when candles do this, when they hit it and they go up, when they hit it and go through it. Notice how it's always one candle going right through it. It's not like one candle pauses here and then the next goes through it. It's always like if it pauses there, it's going up. If it pauses there, it's going up. Pauses going up. Just like to note that. Closes above. I've already went over this. just plays outside the lines a little bit. Remember how I was saying that if you find something on the daily chart and you're going to be using that, it's going to kind of carve outside the lines and not do exactly what you think it's going to do. It's going to move like this. It's not going to stop on a dime. It could move like this and then stop on a dime, like over here we had. Could move like this, stop on a dime right here, and then give you that. So let's just say you took this trade off of this. You sold here, stop loss above this high. I mean, that would have been a while you're waiting. Took profit at New York low. Took one contract here. Took the other contract at this low. That would have been this is the only way I trade Asia session, is if it aligns with something bigger. That would have been 24644. $340 and 440 points, 50 points. That's pretty good. 200 points for take profit 1, 200 points or 400 points for take profit 2. And that's an Asia session. Well, the move takes place in New York session, but the entry was in Asia session. Sometimes it'll do that. It'll give you nice entries in Asia session and won't return to them in New York. Like today, you would have had to been on early, or you would have had to predict that. I think the regular trading hours gap was up, right? 414. Yeah. Oops. And it didn't even return to that. I don't know how that keeps popping up. I'll like go to do that and it just appears. Alright. I think I'm going to wrap it up for today. I hope you learned something. Good luck and have a good night. Appreciate you guys for watching.